Almost every country in the world is in debt. At first, that might sound a bit exaggerated, but when you look at the numbers, you quickly realize how serious the situation really is. The United States currently has over $38 trillion in debt, the highest level in its history. The European Union is around $14 trillion, and Japan carries nearly $9 trillion in debt. And it's not just them. Even oil-rich countries like Saudi Arabia or export giants like Germany and China are under significant debt burdens. So naturally, a simple yet unsettling question comes to mind. If everyone is in debt, then who are they in debt to? This is exactly where the topic stops being just about economics. It becomes a story where money, power, and history are deeply intertwined. And to be honest, this story is far more complex than it appears from the outside. Because debt is not just a heavy burden, as most people think. It is actually one of the fundamental building blocks of how the modern world operates. Wars, economic crises, sudden booms or massive collapses, all of them are, in some way, built on this invisible financial structure. If you start digging into this system and follow the trail of creditors, you eventually reach a rather interesting and slightly unsettling conclusion. The world isn't really in debt to someone else. It is, in a sense, in debt to itself. But as logical as that might sound, it doesn't mean everyone benefits equally from the system. Today, global debt has surpassed $315 trillion, nearly 3 times the size of the world economy. To understand how we got here, we need to take a brief journey back in time. Because this system didn't start with credit cards or digital banking, its roots go back to war. Let's go back to the year 1694. England was at war with France and facing a severe financial crisis. Its gold reserves were depleted, and the king didn't have enough money to continue the war. So they turned to merchants and asked for loans. But this wasn't an ordinary loan. The state promised to pay continuous interest, backed by future tax revenues. To manage this system, the Bank of England was established. This was a revolutionary shift. For the first time, a state began spending money it didn't yet have. And lenders didn't just receive money in return, they received a tradable promise. That promise, known as government bonds, became the foundation of the modern financial system. This idea spread rapidly. France adopted it, the Netherlands refined it further, and newly established states embraced the system. Over time, the meaning of debt completely changed. What was once seen as a sign of weakness became a sign of trust. The more easily a country could borrow, the stronger it was considered. In the past, empires grew rich by conquering land and extracting gold. Today, they achieve the same goal by issuing bonds. The battlefield is no longer physical, it is financial. Returning to the present, the picture becomes even more unusual. Debt has effectively become the world's largest export. The United States is tens of trillions of dollars in debt. Japan is deeply indebted, and global debt increases by roughly $1 trillion every 100 days. The system is constantly expanding. At this point, it's important to recognize something. Everyone is in debt, but at the same time, everyone is also a creditor in some way. Governments borrow, banks lend, people pay taxes, and pension funds purchase these debts. The system essentially circulates within itself. Take the United States as an example. About half of its $38 trillion debt is held by investors, and a large portion of those investors are American institutions like banks, pension funds, and insurance companies. The remaining portion is held by foreign countries, with Japan and China among the largest. But the key point is this: most of the U.S. debt exists within its own system. The government issues bonds, institutions buy them, The central bank purchases them and creates money, and citizens sustain the system through taxes. So the debt is real, but the creditors are often part of the same system. And this structure is not unique to the United States. Globally, the same cycle exists. Countries lend to each other, those debts move across borders, and eventually flow back into major economies. It's like a constantly circulating chain of promises. But there's also a hidden side to this system: the markets. Large funds, central banks, and financial institutions act as referees in this game. They determine which countries are trustworthy and who can borrow at lower interest rates. When that trust disappears, the consequences are fast and often severe. We saw this during the Greek debt crisis. Interest rates surged, the economy shrank, and serious social consequences followed. Similar patterns emerged in countries like Argentina and Sri Lanka, exposing the fragility of the system. Yet what's striking is this: even when the system breaks, it doesn't disappear. It gets restructured and starts working again. Because the modern financial system is not built to eliminate debt, it is built to sustain it. Governments don't aim to fully repay and eliminate their debt. Instead, they refinance it continuously, taking on new debt to roll over old debt. This is the core mechanism of the system. And what keeps this mechanism running is not just money, but trust. As long as people and institutions believe that governments will meet their obligations, the system functions. But when that balance of trust is disrupted, everything can change very quickly. There's another important point here. This system does not produce equal outcomes for everyone. Interest payments typically flow from the bottom upward, from workers and taxpayers to large investors and institutions. That's why as global debt increases, inequality tends to rise as well. In the end, one thing becomes clear: the line between debtor and creditor is extremely blurred. We are all part of this cycle. In a way, we are both indebted and, indirectly, creditors. So the question, who are we in debt to, doesn't have a simple answer, because the answer is this: to all of us, and at the same time, to ourselves. This system is built on balance, but that balance depends entirely on trust. If that trust ever disappears, then the true nature of debt becomes clear: a promise deferred. And perhaps the most important question is this: can that promise be deferred forever? If you want to see more videos like this, don't forget to subscribe and hit the like button.